Let's bring in Dan Deming, Managing Director at KKM Financial down at the CBOE. Dan, let's put the macro stuff on hold for a sec as we see analysts talk the holiday season as the latest Apple rally, reason. You go from content developments to iPhone sales, holiday sales. There's always some reason to buy Apple, apparently. If you go from the sell side perspective, what do you think?
Well, their upward trajectory continues, Oliver, and it's been significant throughout this last quarter. And yesterday's kickoff into 2020 was very strong, and really not giving up too much ground, as you guys pointed out. It did look lower initially, but really opened just down slightly on the day. I think when you look at the trends in place, Apple still is in a great position coming into 2020, and I think some of the things that you and Jeff just spoke about are certainly key factors, and particularly when you look at the iPhone cyclical patterns, and again, Apple generating revenue away from the iPhone and services being a big part of that, and that's where the margins are. So I think that's another positive for Apple. We talked about this a few weeks ago, Oliver, and when I looked at it then, it felt like it had a nice run, but I still wanted to have the opportunity to participate in the upside. So at that point, we looked at a risk reversal, which gave you the unlimited upside if the stock continued to take off because you had an upside call. I still like that trade example, but now that we're rolling into 2020, I think that the market is probably overdue for maybe a little bit of a pullback here, just the questioning valuations, that I might want to reduce my risk. So I'm looking at a trade example today of just basically buying a call spread in Apple.
Okay, so you're saying still, if I heard you right, buy call spread, then still looking for upside exposure, just something that gives you a little bit of hedge to where, if days like today start to add up, you're not going to get burned.
Exactly. So in the other trade example that I gave a few weeks ago when we looked at risk reversal, the nice thing about it was that you didn't have to put any cash out. We actually, that was initiated at a credit if you looked at the pricing structure. But now, in order to put the call spread on, the one thing you do have to give up is a little bit of premium. You have to pay for that call spread. But I like the idea here of capping my downside, basically limiting my exposure to the downside. And that's what a call spread does relative to a risk reversal, where you do still technically have unlimited downside should we slip below that low end, the lower side put.
Yeah. All right. So defining risk then, given the run that Apple's had, by the way, when I say days like today, I'm apparently only talking about a 40 basis point decline. Dan, to put this in perspective, markets seem to be finding a little bit of a bid in today's early drop. How important of a test is this to see just how kind of frothy and, stretched this market has gotten?
Yeah, I think it's significant, Oliver, and I think the one thing that's interesting is that the market was probably looking for a reason to sell off in because of the run up the last couple of weeks, and typically geopolitical events like this don't have a lasting impact unless it becomes an economic issue. So certainly it's causing some uncertainty here, some concern short term. Is it going to lead to further unrest in the Middle East, which could, in theory, create economic weakness down the line, but historically we see these things wash out of the market pretty quickly, and that's why I think you've seen the market already come back basically a full 1% from the lows overnight. Yeah.
All right. Bonds and gold not reversing. That ISM print didn't help either, Dan. Should we be worried that we were looking for a bounce and we didn't get it, or as Nicole and I were discussing, is it time to let the rest of the world shine?
Well, and they're trying to turn the tide over there, and you are seeing at least some moderation. I think the key number, though, Oliver, U.S. is more of a service economy than a manufacturing economy. So these weaker manufacturing numbers, although disappointing, I think next week's ISM non-manufacturing number is probably more important because, again, if we see weakness on both fronts, then that would be alarming, a greater concern issue, I think. But ultimately, this one-off number, although disappointing, we did see a reaction in the futures. We saw them dip about 6 handles after that news broke. But now trying to fight back, and again, really kind of just trying to price in the uncertainty of this current event from a geopolitical standpoint, but is it really going to have an impact on the economic structure moving forward? And that's why I think the market continues to try to find that upward trajectory.
All right, Dan Deming, really good stuff walking through the big movers here with us this morning. A little Apple trade too, Dan, from the floor of the CBOE, Managing Director at KKM Financial.